The Great Debasement Trade, How Gold Turned into a Life Jacket. 1. Introduction. Imagine the global economy as a giant boat. For decades, governments patched leaks with duct tape made of dead and freshly printed money. It worked, kind of, until the patches started peeling off. Now the boat's taking on water faster than it can be bailed out. And some passengers, the ones holding the biggest wallets, are quietly grabbing golden life jackets. So what does that actually mean? It means confidence in the system is cracking. The smart money, institutional investors, sovereign funds, and central banks, are shifting away from paper promises toward real assets. They've seen this movie before. The ending never changes. Footnote. This section frames the global financial system as unstable and humorously likens gold to a life jacket for those escaping a sinking ship. 2. The paper mirage. Here's the funny part. People still trust the paper markets. Bonds, stocks, and treasury notes all look fancy until you realize they're just IOUs printed by governments who owe more than they own. For years, foreign buyers were the biggest fans of U.S. treasuries. Now? They've ghosted. Their ownership share has dropped from around 45% in 2008 to roughly 15% today. Ouch. So what fills the gap? Stablecoins, digital duct tape for a leaky bond market. They're a clever illusion of safety, but let's be honest, they're just code-backed IOUs trying to look shiny. Footnote. The decline in foreign demand for U.S. debt is paralleled with the rise of stablecoins, highlighting the shift from traditional to digital confidence. 3. Central banks know the secret. Here's where it gets interesting. While most people debate crypto, central banks are hoarding gold like it's the last dessert at a buffet. They know the script: when paper burns, gold survives. And unlike fiat, gold doesn't require faith in a politician or a policy. It just is. They're not buying Bitcoin. They're not buying NFTs. They're buying gold. Why? Because gold doesn't crash when Wi-Fi goes down. So what does that actually mean? It means even the keepers of the money machine don't trust the machine anymore. Footnote. Central banks' accumulation of gold signals institutional doubt in fiat systems and highlights gold's timeless stability. 4. The exit strategy. Let's talk escape plans. The smart exit isn't about predicting collapse, it's about preparing for it. That means holding enough real cash to breathe, some gold-backed or redeemable digital assets to spend, and physical metals to survive a system reset. The idea is simple. When the first overnight reset hits, and history says it will, convert just enough gold to clear your debts and free your assets. Mortgage? Gone. Panic? Avoided. Confidence? Restored. Then, when the markets overcorrect and the overpriced zombies fall, that's when opportunity knocks. You buy real income assets, real estate, dividend stocks, businesses, when everyone else is too scared to. Footnote. The exit strategy emphasizes layered preparation through tangible assets, positioning gold as the stabilizing bridge during systemic resets. 5. Bitcoin versus gold. Bitcoin's got the hype, gold's got the history. One lives on servers, the other in vaults. Bitcoin's great. Until the power goes out. Gold doesn't need an update or a password reset. It's survived every empire, war, and government experiment in new money. Still, diversification matters. If you want to hold both, fine, just remember, one's a bet, the other's insurance. So what does that actually mean? It means Bitcoin might be exciting, but gold is sleep at night money. Footnote. The section contrasts digital speculation with physical security, humorously emphasizing gold's resilience across ages. 6. The illusion of price. Why's gold down today? Relax. It's just traders doing what traders do, taking profits, pushing buttons, and pretending that price equals value. The truth is, the spot price is mostly theater. The real action happens in the physical market, the one you can hold in your hand, not watch on a screen. If prices drop, gold isn't losing value. The paper measuring it is. Markets can fake trends, but they can't fake reality forever. Footnote. This section mocks short-term market behavior while affirming that true value lies in tangible assets, not digital speculation. 7. The Quiet Rebellion. This is where it all leads, people quietly reclaiming control. Gold and silver aren't about rebellion in the dramatic sense, they're about independence. Every ounce you hold is a vote of no confidence in the system. And when enough people cast that vote, the paper palace starts to tremble. So what does that actually mean? It means taking power back isn't loud. It's methodical. It's calm. It's choosing sound money over sound bites. Footnote. The final section ties the narrative together, portraying gold ownership as an act of self-reliance and subtle defiance.